Hello, everyone. Welcome to How to Trade. I'm Shane Vernier, and this is the Wall Street Open. Right now, we're sort of evaluating the CPI figures. We're watching really big-time moves going on and everything from crypto to the U.S. dollar. Right now, the dollar index is spiked. It's up about 0.25%, and we talked a lot about this yesterday. We had a trade idea for Monday that really said, hey, we need to start thinking about getting long the U.S. dollar, at least in the short term. So we're going to go ahead and recap a few trade ideas that we have out. We're going to break down CPI. We're going to sort of show you why the headlines aren't really indicative of what's going on here, and then we're going to get in here and trade. We're looking to look at Bitcoin, Dogecoin, E-mini S&P 500. We've got to look at that one. Also, U.S. oil starting to behave like we thought it was after the election. You're starting to see that big sell-off come, and I think this is just the beginning. I really do, for U.S. oil to the downside. So a lot going on here, guys. Always a pleasure to be here. Nice, bright and early here in Montana, about 8 a.m. my time, 10 a.m. Eastern. So let's go ahead and get after it. Bobby Bob, good to see you. Dibble, always a pleasure, guys. All right, let's start off with with sort of a trade follow-up here. I like to do these from time to time to sort of show you exactly what we're thinking about and how we like to trade, at least with regards to a big-time number. Mark Corp, good to see you. It's tricky out there. There's a lot going on, Mark, and a lot of it has to do with the U.S. dollar. This one right here, we put this one out on Monday, if you remember Monday. This was an at-market buy on the Japanese yen, the dollar yen, and you can see this is a long-term chart. It's a monthly chart, but when we have those long-term anchor points in play, once we break above a resistance zone, you have to, I don't like saying the word assume, but you almost have to assume that you're really going to rally, and that's exactly what we've got. So that trade idea was a pretty darn good one. That one cashed in for, 109 pips relatively easily. I think that we're in pretty good shape with regards to still the long side of this market. Omega 24, good to see you, Omega. Team Marina, good morning, Team Marina. All right, guys, monthly chart, Japanese yen. What we were looking at here and what we were really skeptical about was this 153 area, 153.50. That was a key. That was a real nice sell for us in the short term. But now that we've broken above that, now we're really looking at getting long this market. And we already had the market play, the market buy on Monday. That was really a dynamite trade. Right now, for me, I'd go right down to a 4-hour and maybe even a 30-minute. But let's just take a look at what's going on the 4-hour chart. And this just really isn't rocket science, guys. I mean, that's it. Spike low there, spike low, spike high, pulled back, sort of fizzled out at 50%. And now it looks like we're moving higher. So how can we get in on this price action right now for this dollar yen? We got a couple of things we can do for the rest of the day. Number one, we can look at this 153.50 area. That would be a bid for me. That's an auto bid if, in fact, we did get that chance. Now, we're still 140 pips above that. So if we want to get aggressive, and I think that it's probably the right thing to do here, I would be surprised if we don't get another opportunity maybe to bid this thing with a little bit of certainty. You'll notice that you've sort of got some market structure up here that could be a problem for us. But the bidders are there right there for the U.S. dollar. And traditionally, that yen has been one of the absolute weakest against the U.S. dollar. So at least since the last 2 years. For me, I would love a pullback on a 30-minute chart. I think that would be fantastic. 154.70. The biggest challenge we're going to have is we're probably not going to get that opportunity. Why? Because we are driving, and we're driving north, and the reason why is our CPI figure. So if I want to be hyper aggressive, I'm not really the biggest fan of a 5-minute chart on my Forex pairs, but something like this could give you an opportunity maybe to bid this thing. Something like that. 154.80, somewhere in there. So if you do get a chance to get a pullback, I think we're going to be in great shape. The reason why is your dollar index is rocking and rolling. Here's a 5-minute chart for your dollar index. Big time level up here. I want everybody to write it in your notebooks or write it. I keep a pad right in front of me just like this, just a clipboard. And I'm always writing down key numbers, key levels I have to be aware of. 2024's high, 106.49. That's huge for the dollar index. I think we're going higher. I think the dollar is going a lot higher, and the reason why I say that is the Fed is quickly, and I mean quickly, backpedaling off those rate cuts. So it's absolutely going to be interesting. Let me see, Team Marina, early AM in beautiful Yellowstone Parks, a stone's throw away. Yeah, it's getting a little bit cold up here this time of year, though. We're supposed to get probably our first real significant snow of the year on Friday, so it's definitely starting to change over. We're getting very close to winter. DXY, though, guys, absolutely huge. So if you're going to be watching this dollar and you want to gauge the relative strength of the dollar, this is what we're looking at. There's your yearly high right there, monthly double top. I would expect a little bit of two-way action right around 106.50. You got your long-term market structure there. Now you've got a double top. It's really bullish. It's really bullish. It's been really bullish since the election. So a lot going on there. I think that's, if I'm doing anything here with the dollar, I want to be long. So we're just going to wait and see exactly how this pans out. But just take one good look at what's happened since CPI. That's a big time rally. Compression right there. Bang, bang, break. Whew. Look out above, I would say. Not really much reason to believe we're going to get a retracement here. Okay, we did have one other trade follow-up that I want to talk about before we get started, really with our deeper discussion on CPI. This was a video we put out on Forex Signals TV. Remember, we have two YouTube channels. We've got How to Trade TV, How to Trade on YouTube, and Forex Signals. Feel free to check those out if you haven't already checked them out. We're putting out videos and shorts multiple times a week, so we're very active there. So if you want to go ahead and check out some of the videos we have, that's great. This was a short that we made on Election Day. Bitcoin rally on a Trump win. Pretty much, that's exactly what happened. If you guys haven't seen that short, it's at Forex Signals. Sort of broke down what I called really basic technical analysis, but simple's easy. Simple's easy and simple's best, in my view. This was relatively easy market read. Nice big rally here, bullish pennant. You can see all that compression right there. Nice pullback, and then we finally broke. And then right there was your Trump victory, and bang, we are off to the races. Psychological barriers at 100,000. Really, no question about it. We're going to get to 100,000. Now, the real question is, our imaginations. How high can Bitcoin go? I don't know. Nobody knows. This market is broken out. It's trending. You're going to hit 100,000. I don't think there's any question about it. I saw you guys talking about it in the live chat earlier. You're 100% right. That's what everybody's talking about. How do we get there? When do we get there? I think we might get there later today. We're at 91,000 right now, and I mean, the market is just absolutely going just in huge jumps. So if you wanted to trade this on an intraday basis, you want to trade Bitcoin on an intraday basis, what could you do? I like a 4-hour chart with Bitcoin. The reason why is it's sort of a 24-hour commodity. I compare it to commodity. It's not technically a commodity, but you can definitely see the market structure and what exactly has happened. It's just been one rally right after another, and then right there, what do you have? You sort of have another one of those big pennants. This one's on a 4-hour chart, and you'll notice that we've sort of already broken out. I want to get long. So if I was going to get long and sort of trade this pennant, this bullish pennant here on Bitcoin, be something like this. Trend line right in here. And, once again, the biggest thing to remember is you just need a directional move, a bullish directional move, and then you'll have a chance maybe to trade this thing, trade something like a pennant. Well, let's go right to our, go to our triangle. Doesn't have to be perfect, guys. Doesn't have to be perfect, but it's there. So there's our break. So how do I want to trade it? A couple of ways I could trade it. I could just buy pullbacks on, say, a 30-minute chart. I could go down and just try to buy pullbacks on the Fibonacci, or I could be patient, sort of use my head and say, where's my best entry? If you're sort of an order block trader, something like this, take a look at all the action that's right down there, right around 85,000. I'm probably looking to get long somewhere down in there, right in the middle of this pennant. Be relatively easy. My stop loss is going to be down beneath the pennant. You can either put it down here beneath the complete move, somewhere down in there. You could also tighten this pennant up, but for me, I probably would be looking at somewhere beneath that lower trend line. That would be pretty good stop loss. If you want to play it very, very tight, you can certainly put it right up there as well. So a lot going on here. Let me see. Manish, good to see you. I'm doing very, very well. Thank you for asking. But this is some active stuff. Definitely a nice big bullish break. If we wanted to be hyper aggressive here, we could go down to our 30-minute chart and say, what do we want to do here? And that would be just simply buying pullbacks. I would be a little more patient. We are going to get a pullback here to buy. I just would be a little more patient. I don't know that there's any reason to force it from, say, like a 90,154. But if you wanted to do something right there from 90,000, I can't really blame you. This is a breakout. This is a freight train, and there's just a lot going on. Very strange to see the dollar gaining ground and crypto. I mean, take a look at the DXY right now, guys. The DXY is absolutely exploding. I mean, we just went to that yearly high as we're talking. Let's go down to a 1-minute chart and see what's happening here. This is an explosive situation. We're starting to see our markets turn. Our stock markets are turning right now, and the reason why is the dollar is absolutely exploding. We've got bearish action right here in gold. We've got a little bit in WTI crude, but you're also seeing those risk assets turned from what was, I would say, sort of a muted close. Now we're starting to go negative, and then something like this, maybe our triple moving average on maybe a 5-minute. You can see right there, where did we get our crossover? There it was. Right there, 7:45 my time, 9:45 Eastern. Bam. There was your sell. So if you're on this triple moving average strategy on, say, your E-mini S&P 500 futures, then you're short. We'll see exactly how that pans out. All right, guys, we got a lot to recap here. I know we sort of got out in the tall grass there, but the markets are moving. This is absolutely fun. It's fun to trade when we're in market situations like this. Still pricing election fallout, no question about it. Absolutely no question about it. So what we're going to see realistically out of our, that's one thing about these economic calendars is they're just clunky. A couple of things to remember today, all right? Number one, MBA 30-year mortgage rate is up to 6.86. That's a huge move. That's a huge move and really suggests that we're going into a hawkish period of monetary policy. Let me see if I can get rid of that. The index, I think that home sellers are going to find themselves in a precarious position because these higher interest rates, these are not going to be good for applications. You see we were negative 11% last week. We're negative 0.5. Don't forget about those mortgage rates and those T-bill yields. Those are absolutely huge. They suggest that long-term lenders aren't interested in putting money on the street right now. They're interested in holding it. Pretty crazy. Let me see, Manish. I'm trading your 5-8-13 crossover strategy. It's working well. Thank you very much. Absolutely. Thank you. What we've got going here is our CPI numbers. Now, our CPI figures are, I'm going to show you the headlines. I disagree completely with what's happening in the financial media these days. I don't know what they're looking at, but just for all intents and purposes, I know Connor covered this as it broke and traded this live, but 0.3%, that's sort of in policy. That's where we expected the number to come in. Core CPI, there you go, up a little bit, right? Okay. What about CPI? CPI came in at 2.6%, 0.2% static. So we would say these are in line with expectations. What does that mean? It means it came in as expected, and also it's the same as the previous release. Now, there's a couple different ways to interpret this type of number, and the financial media likes it. Annual inflation rate hits 2.6 in October, meeting expectations. So the idea is that the expectations sort of suggest that we're okay, that we're doing all right here with the battle against inflation. I couldn't disagree more. I really couldn't disagree more. I think that we've got a real problem here. We got a problem because this inflation, these are growth numbers. So when we look at something like this, T-bills were down initially. Some of the long-term debt markets were down, but take a look at this. Increased 0.2% for the month. That took the 12-month inflation rate to 2.6%, up 0.2%. So the readings were both in line for Dow Jones estimates. So here's the consumer price index chart that they like to show you. They like to say, listen, we've made all of this progress. Well, this is the post-COVID era. All right, prices were out of whack. No question about it. Supply chain disruptions. We had just a flood of money still in the market, what I call a lot of slack. And then you started to see things sort of coming down, okay? Now, most economists are going to tell you that that is good. Let me see, Luigi, good to see you. Good morning. They're going to tell you that that's progress and that that's good. That's not true. And the reason why it's not true is you're still growing. We are still growing. Now, just because we're not growing at 9%, which, by the way, back in the middle of 2022, nobody was reporting that they were growing at 9%. That was never even reported. So we're doing okay. We're still very high. This is the chart that matters. CPI right here. Over the past year, the United States, this is the raw CPI index data in the United States, increased to 315.66 in October from 315.30 in September of 2024. The annual inflation rate increased to 2.6 from 2.4. Take a look at our trajectory. We're still rising. Prices are still going up. We haven't even got a solid plateau. A lot of folks are going to say, Shane, we're plateauing. It simply isn't true. The inflation situation is bad. It's bad. And one of the reasons why you see something like your dollar index absolutely explode. This is a 1-minute chart, and the dollar's absolutely exploding here. So if we're up at yearly highs and we just took that out, that tells us that the markets aren't buying that inflation's in check, not even a little bit. So as much as I hate to be, I won't say I'm the bearer of bad news or a bah humbug, but I mean, this headline right here, look at inflation hits 2.6. The 10-year Treasury yield slides after a tame inflation report. It's not tame. Tame suggests that we're making progress. Now, you can pull up that first chart and say, well, it's not as bad as it was. It's still bad. Can the Fed put the rabbit back in the hat? And the answer is no, they can't. They're going to pass the buck to tariffs. They're going to pass the buck to the new administration's policies, economic policies, and they're going to say that the high inflation is because of them. That's what's coming. Buckle up, guys. This is going to be a fight between the Fed and the Trump administration. There's no question about it. Now, how do we get back to maybe getting some decent prices? Interest rate cuts are over. I think they're over. I think we may get one more. We may not get one more. I don't think you're going to get those cuts in 2025. I think it's going to be a very different environment, and the markets agree with me. Now, the real question is when does all the risk assets and when does everything come off? Well, we don't know just yet, but we will know. We will know very soon. Right here, if you want to trade, be sure to tune into Switch Markets. They've got you covered pretty much everything you want to trade. They've got CFD. They've got your pairs, your Forex pairs, and really anything that you want to do to get involved in the markets. I think if you haven't already checked them out, be sure to do just that. All right, I put a trade idea out yesterday that has to do with gold. This gold market is coming off. There's no question about it. The reason why is because your dollar's going up. Now, remember, as we do get into shifting monetary policy, meaning when we do see interest rates go up or maybe not get cut as much as we thought they were in September, then we've got a problem and we've got to start repricing our assets across the board. Gold is going to be one of the big losers. Now, we're still right around all-time highs. We're still right around 2,600. That's not too bad. You're off at 2,790, so it's not the sell-off of the century, but it is a correction. There's no question about it. So if I'm trading gold, do I want to be long or short? Excuse me. I want to take my time. I don't want to just jump in. I don't want to get in there and see exactly what exactly this thing's going to do just yet. I'm not sure. Bearish action's there, and we're going to pull a bearish chart, and I'll show you how to trade this thing to the short if you want to. Once again, we put the trade idea out yesterday. I want to buy it down there at 24.85-ish. I think that's going to be a pretty good trade. And we have that down for about $20. I think you're going to easily get that move. Wash out at 2,500. We'll grab that dip, and we'll get right back up above 2,500. I don't see really anything wrong with that trade at all. Now, if we want to trade right now, I love the 4-hour chart for gold. Pretty darn good chart. The biggest challenge we have is we don't really have any good market structure. Now, if we wanted to buy, there's a couple of things we could do. Number one, we've sort of got a spike low there and a bit of a pullback. We're waiting for another low to develop. That would be a textbook Bollinger W. And if you haven't seen our strategy video, if you're brand new, check out the How to Trade Trading Room, and you'll be looking at a pretty good Bollinger W strategy that can give you a chance maybe to get long this market and pick an intermediate term low. Now, as far as I'm concerned, I want to sell with the bearish pressure right now. I want to buy when we get down there right around our 24.85 level. I want to be a big-time bidder down there. But for right now, I want to sell. So if I'm going to sell this thing, what's a pretty good time frame? You can't beat the daily. This is good market structure. What do we have right here? Is this a good enough spike for me sort of to base my Fibonacci's on? That's what I like to do. I use Fibonacci's to get in with the bearish pressure here. What's our high right there? 27.10.23. Our high right there is 27.10.45. That's our spike. Remember, our spike is just a three. It's just a 3-candle pattern. We've got for our tops, it's essentially just a swing high. Our upper extreme is above the previous candle and above the subsequent candle. That gives us the top of market structure. And right here, this is going to be sort of our lower extreme. So this is how we're going to build our Fibonacci retracement sequence. When I trade Fibonacci's, I ignore the 23%, whatever it is, 25%. I ignore it completely. I've watched too many traders get just chewed up. I want a nice move to 38%, which in this case is right up at 26.36. That's a pretty darn good trade. So we're about $36 off of this. I don't necessarily know that we're going to get that kind of a pullback today, but we may. And right now, if the dollar's stronger, I want to get short gold if I can get there. So I'm watching gold closely. I'm not involved. I get asked a ton of questions. Shane, up or down? Bullish or bearish right now, gold? I will say that I'm neither. I want to get that price in a state of disequilibrium. I want pricing to get truly out of whack. Now, right now, we're grinding south. There's no question about it, but it hasn't been easy. I mean, take a look. There's your rally. There's been a lot of compression right there, and then a swift break, and then a big retracement. Imagine if you would have sold right there at the bottom of that daily candle and then watched that thing just run against you the next day before really continuing down. That's what I call pain. You're taking a lot of pain on that trade. I don't want the pain. So what I'm going to do is I'm going to wait for a nice market entry point to the bear. If it's there, I'll take it. But if we get our premium trade, that's going to be our washout down there at 24.85, and that's going to be our bid. That's the one that's going to make us smile ear to ear. And we may have to wait. It may take a week, may take a few days, but I'm more than willing to be positive with it and definitely give it a little bit of time to develop. Something to think about there. All right, guys, we had a couple other things to go over today. Today was CPI. We just covered CPI. Tomorrow is going to be US PPI. Jay Powell's going to speak. I'm fascinated to see what he says tomorrow. I think that we could be in real trouble with the tone between the Fed and the federal government. I think those guys are going to be button heads in a big, big way. It's going to be Powell and Trump, and it's not going to stop. We went around and around the first Trump administration. I fully expect this to be one of the hot button issues of Q1, especially after Trump is sworn in. But definitely the EIA inventories are going to be 1 day removed. Remember, WTI crude oil, we had Veterans Day on Monday. That bumps those inventory reports to Thursday as opposed to today. But that's going to be a big-time news day. We'll be in the saddle for you there. Definitely Friday retail sales, going to be a big number. Right now, we're looking at going into a recession. There's no question about it. I'm sort of the only one saying that. A lot of people say the economy is in a great spot. I disagree. I think that the jobs numbers have been cooked, and I think that all of a sudden inflation, you can try to put lipstick on a pig as much as you want. That inflation growth is still there. It's still there. I think that you're going to get a big time correction in these markets coming. And remember, as far as what can we really do trading wise, the biggest thing to do is remember what happened this morning. How does CPI impact the Forex? If you get a low CPI reading, it's going to be bearish for the USD. If you get a high CPI reading, it's going to be bullish for the USD. Today's was in line, okay? Theoretically, it didn't come in beneath expectations, so we're not seeing that progress in the inflation numbers, and that's going to be a real problem for us. So even though we didn't get a hot inflation reading, it's still higher than we expected, and that's a real problem. That's a real problem because all of a sudden you can't cut interest rates, and if you can't cut interest rates, we've already priced major rate cuts. We've already priced them. And if you can't do it, major problems. In any case, right here, U.S. oil on the daily, I've been sort of overtly bearish. I've been outspoken. I believe that the U.S. oil, it's just a matter of time before we go down to 64.50. I fully expect that. My long-term number, I know I show you guys this every day, but I really am just waiting for this market to fall away to that big-time number. I like to stress this number because no one else is talking about it. Right there, remember, all-time lows, it wasn't exactly $41.25, but it was right around $40, negative $40 is what a barrel of oil was right after COVID, something like that. That's the true bottom of this market. It's not zero. It's not 1 cent. The COVID panic brought negative oil pricing. No one in the financial media is talking about that, and they're making a big mistake. There's your all-time high right there. Or not, it wasn't your all-time high, excuse me, but it was the 5-year high, I guess you would say, and that was after Russian invasion of the Ukraine. Right there, 64.87. This market's bearish for me. Now that is the huge level. Some will write $65 to $64.50. That's the big one. That's where we're looking to bid. I'll be bidding 64.75s all day long. Do we get a chance at them? I believe we're going to get a chance at it. It would not shock me if we show up tomorrow or if we show up Friday and see that big move down into the low 60s. You've got a couple things working against crude oil right now. Number one, fall seasonality. We're going into the winter months. That's going to mean reduced demand and bearish pricing. Okay, that's the first bearish market driver. Number two is the Trump administration. They've promised drill, baby, drill. They're going to bring more supply to the global markets, not just U.S. markets, global markets. That's another big bearish market driver. And number three, you've got a stronger U.S. dollar. The DXY right now trending up about 0.5% today. That really hurts crude oil prices. I'm a seller until we get down there to that 64.75, somewhere down in there. Let's go to a 30-minute chart and see if we can get a trade. This right here looks to me like it's shaping up to be a great one. Bearish market structure, no question about it. There's your high, somewhere right in there. If you wanted to send them, sell at market, you could. I mean, it's worth taking a shot at probably right there. What do you have right there? That's sort of your 630. That's the top of your CPI number right there, 67.50. Right here, we've been trading for about, I don't know, we've been trading for about an hour here with full volume. but I would include the CPI. I would include the CPI as the top of my range here. And you see right here, we're taking a little bit of heat. There's some bidders in the market right now. A lot of that has to do with that CPI figure and just that bringing in a lot of uncertainty to the market. I still would much rather be short than long. So if in fact you wanted to take 67.50s, you could. If you wanted to wait, maybe 67.88, it's the top of your golden zone. That's not bad either. But for right this minute, we're seeing chaotic price action. We're taking a little bit of heat on this trade, 67.50. I'm going to go ahead and let that one simmer at least till the end of the stream. We'll see what happens. We may get swept out of it. We may not. For me, I would much rather be short than long, though. I would much rather be short than long. If the market reverses in our face, that's just part of doing business. Your stop loss on a trade like this probably should be up above your golden zone. So you want to dial that leverage down and make sure that you don't lose all your money from here to here. But 67.50, 67.89, you're probably going to need to get a move. You're probably going to need to get a move back down in here, somewhere down around that quarter level, maybe that 20 level. So somewhere probably right, maybe even 14 or 15. That would have to be your profit target to make this trade worthwhile. I would say it's a high risk trade, no question about it. And the reason why is your stop out doesn't really mean a whole lot. I mean, it's sort of arbitrary. I mean, we've got our Fibonacci's there, but remember, daily levels, weekly levels, monthly levels are much more reliable than 30-minute levels and 5-minute levels. I'm a big believer in anchor points. That's why when we put those trade ideas out, our written trade ideas and analytics, we talk a lot about anchor points. We talk a lot about market state and potentially getting into good trades as opposed to just sort of trying to scalp a 30-minute chart. Right now, I wouldn't be hanging around much longer in this trade. Looks to me like we're going to get stopped out, but let's let it go. That's sort of our trade setup. We'll see exactly what happens if those sellers get involved here in the next few minutes before we sign off. All right, let's see. Here's your ES trade. This would have been this was the one we were talking about, that 5-minute entry on that triple moving average strategy, and you're making money. You're still making money. You'll notice you got that nice big spike, and now we retraced. It's never easy with strategies like this. It's never easy, but this one right here caught you a pretty good move. Remember the rules for the triple moving average. Rules are simple. You've got a nice, there's our 5. This is the 5-8-13. The short term moving average crosses the intermediate term, and then it comes off. You've got to get a close, a candle close that's beneath all 3 moving averages. And what you have going here is finally that 13 EMA crossed over the other ones, which doesn't really mean anything to our trade management, but it does show us that our anchor point, our anchor EMA is now above price. So we're on the right side of this market thus far. We'll see what happens. We'll see exactly how this develops. All right, let's see what else. I did want to talk a little bit about Dogecoin, something like this. Dogecoin's just been absolutely exploding. It's up another 10.5% today. By far one of the most active assets in the world. And take a look at this. Now, this was sort of the all-time range I was looking at for Doge. Right there, spike high up at Doge, and then you came right down, sort of based out, right around, 5 cents or so. And now you've absolutely exploded, and you're trading about 42 cents. These big time levels, these big time ranges mean something. Markets have memories. And if I'm trading Dogecoin and I'm long, number one, congratulations. That's absolutely fantastic. I'm happy for you. You made a stack of cash. But as far as what should we be looking at for like our future prognostications for something like Doge? For me, it's real simple. All-time high down to your lows. 62%, the back end of that golden zone. 47 cents. Probably going to see a little bit of resistance between 47 and 50. I would be awfully surprised if we didn't, in fact, get that trade. See a lot of profit taking up there. This is a major correction. Most of this, actually, all this has developed since the election. 160%, 160% gains. Did anybody in this room or on YouTube, did you guys make a stack of money on this crypto break? If you did, I'm happy for you. I didn't see it coming. 9 EMA, MVP Gaming, it's the 9 EMA, sir. Yeah, well, I mean, we could talk a little bit about how to trade EMAs on this Doge. For me, I just don't think you need it. I really don't think you need it. I mean, take a good look at this. Absolutely unbelievable. What a move. What a move. Full disclosure, I was invested in Shiba for a long time, Shiba Inu. Right here, you can see that it's been active. There was the big break back in March, and now you've got another big break since the election. And a lot of the idea here is that you're going to see some of these coins maybe integrated into the X platform. A lot of talk about that. if you get the deregulation from the Trump administration, you may get that. You may get that. So let's see. MVP Gaming, 9 EMA. You want to go with just a straight 9 EMA trade? See how our U.S. oil's doing. Took a spike right there, but we're still alive. Price is back down, sort of near our 50. That's an interesting play. I think we'll be okay here, but you never know. If we do sell off, we should sell off and fill in down in here maybe, pay us off. But if not, we're going to get knocked out of that one bigger than life. All right, let's see. 9 EMA. Let's go ahead and see if we can find my template here for the 9 EMA. 9 EMA with RSI confirmation. We're going to do more of this tomorrow. Euro USD 5-minute chart. There's our 9 EMA right there, clear as day. We also do some 920. You'll notice that 20 EMA. Also, there's your crossover. What we're looking for right now would be a buy signal on the 5-minute Euro USD. We're in oversold territory. You can see by our RSI. So what we're looking for is the 9 to cross the 20 and then go long. If you don't want to get the 20 involved in a trade like this, what would you be looking to do? You'd just be looking for a bullish close above that 9 EMA, and that would, in fact, give you your long. Interesting stuff. I think you can get away with the 5-minute chart on the Euro USD right now, probably for another 90 minutes or so. I wouldn't be doing this as you get into that late U.S. session. I just wouldn't do it. But if you wanted to execute that 9 EMA strategy, MVP Gaming, you could do it just like that. Highly recommend finding some confirmation. One of the things that we've used frequently is the RSI indicator to confirm or deny our plays. So right here on this bullish close, if you were to get a bullish candle close, RSI is already confirmed that we're in oversold territory. You get a bullish close above that 9 EMA, you're sending them long. It's that simple. All right, everybody, I'm going to go ahead and sign off here for a few hours. Interesting stuff. We got a pretty good move on that triple moving average crossover on the E-mini S&P 500. Right now, we're looking at the dollar, and the dollar is everything. Starting to fade a little bit right now. I mean, you're seeing your Euro USD. It looks like you're going to get an entry on that 9 EMA, so that could be a long. If you do, in fact, take that trade, just one more thing real quick, something like this. That's where my stop's going to be, right beneath that swing low. I would love to get that bullish close above the 9 EMA, and then your profit target could be up here, maybe in the top of market structure, or you could just use a fixed risk versus reward. I always leave that up to the traders. Personally, I probably would dial in with a 1-to-1 risk reward. And the reason why I would do that is I like to win. I like a high success rate. I don't like a low success rate. I really don't. Looks like we're making a bit of a comeback on that U.S. oil trade. Let's go ahead and look. It is, though. This is definitely compressed trading. We're going to need to see that bearish break and sort of fill in down here to go profitable. Right now, it looks to me like we're getting sort of leverage off of that 38%. Wouldn't surprise me at all if we get stopped out on this one. That's for sure. All right, everybody, I'm going to go ahead and sign off here for a few hours. We'll be back tomorrow. Connor's got a live trading Q&A, so go ahead and check that out. Today's headliners. Tomorrow, we're going to talk PPI and Jerome Powell. We're also going to work through some of these strategies, maybe do a few more of them live, maybe add a stream, too, towards the end of the week, especially if we get into the kind of trading that I think we're going to get into rolling into retail sales on Friday. This is a good week to be in the market, so definitely watch your risk. Stops down, leverage, and check. All right, everybody, thank you for joining me bright and early today. Trade the action well, and we'll talk soon. See you.